Welcome to the latest Motley Fool scoreboard. I'm on in Chalk-Balloon. We've got longtime fools Emily Flippen and Asit Sharma giving a 1 to 10 rating to a strong contender for the title of most AI company in the world. It's Microsoft, ticker symbol MSFT. We'll start with the business, including factors like industry and competition. 10 is invincible. A 1 is hopeless. Asit's given an 8. Emily's given it a 9. We'll start with the lower score in Asit.
Well, Anand, this is such a well-run business, but it's an investment mode business, a business that is investing in a lot of different areas. You can look at the CapEx for artificial intelligence, what they need to build out for their data centers, their cooperative investments in nuclear energy, investments in their own chips. They're the last of the big hyperscalers to come out with their own custom chips to reduce the cost of workloads for their customers, but the Maya chip is coming out this year. So this is a company that consistently has benefited from the investments it's made, but those are only increasing. And that's the reason that I give it an 8 rather than a 10, because Microsoft has done such an excellent job in the marketplace. I think they have some need to keep up and keep ahead of the competition, keep ahead of the competition. There we go. And this is a slight risk factor, which I'll talk about more when we discuss financials.
I'm more forgiving to Microsoft here. I give it a 9. And yes, everything Asit mentioned is true. I mean, they're dominant at what they do. And their business is so diversified. It's really hard to imagine a better business for Microsoft. It's good they're investing all this money, though, into the AI initiatives that they need to ensure that they are at the future of whatever AI has in store for us. Because the alternative is, hey, we just don't invest there. And I would ding points for that decision. So, in my opinion, Microsoft's stuck between a rock and a hard place here. I think they chose the better of these two outcomes, and I give them a 9 for that.
Right. Management, a 10 is Warren Buffett, a 1 is Homer Simpson. Asit's giving a perfect 10. Emily's giving an 8. We'll start with some of the minor flaws first.
Yeah, I mean, I love this management team. Let's be very clear about that. And Satya Nadella has been really successful in transforming Microsoft's business towards that cloud-focused model. That growth has really paid off for shareholders. And I will say the company culture has held up well in comparison to other tech giants, even during the shift. But I am always a little questioning of Microsoft's acquisitive bent. Sometimes I really don't quite see the vision myself, especially if I think they're able to kind of innovate internally instead. And that reliance takes away a couple points for me.
Yeah, for me, I think Satya Nadella and the team he's built around himself are exactly what you want in a great company. So they seized the moment when he first came on board and really threw a lot of resources at the cloud. And it was more Satya Nadella than Jensen Huang who has pushed generative AI forward, because the relationship with OpenAI, the decision to bring that out into the purview of the world before the other big AI companies were ready to do so, was a meaningful moment. Yeah, that's had such wide-ranging implications. So I think you want an aggressive team that can capitalize on opportunities, put the capital to work. Emily points out a great risk factor. They've made some big acquisitions, and historically, they're not all home runs. But I will take that. If I get a team like this, I'm just happy to be with them as a shareholder.
For financials, a 10 is a fortress, a 1 is yikes. Asit's going with a 9. Emily's going full fortress with a 10. Tell me more, Emily.
I haven't given a 10 before, and that's because nothing in the world is perfect. But look, in this case, Microsoft is one of only two companies in the country with a AAA credit rating. It's better than the government itself, more creditworthy. I mean, I could nitpick at things at the margins, but when a push comes to shove, I mean, nothing is perfect. And if Microsoft isn't a 10, I will venture to say literally no other company is a 10.
So I'm going to find myself in the rare position of disagreeing a lot with Emily here. I think this is, look, obviously it's an amazing balance sheet. So totally. And the credit worthiness is there. I mean, they've got the money they want. They can just pick up the phone at the interest rate they want. So that goes a long way. But one of the things that is different about Microsoft today is that there's a lot of expectation built in the way they manage their capital. I once had a boss in an accounting firm who was really stingy around bonus time at the end of the year. And we used to ask him, like, Rick, why are these bonuses just not so great? And he's like, well, your salary is your salary. A raise is a raise, but a bonus is an expectation. So if I give you guys a big bonus this year, you're going to expect the same next year. And Microsoft, after years of not having to put its capital into things, created an expectation for shareholders that they would be generous with dividends and share buybacks. That is starting to bump up against their new CapEx needs that are due to generative AI. And I don't see them having as much flexibility with the cash flow and balance sheet that they've had in the past in the future. So that's why I've taken them down just a little bit, just a bit.
Got to think that bonus argument with employees goes about as well as kids. It's a crummy Christmas because if I give you good stuff this year, next year is going to be even worse. So
it never landed well.
No, can't imagine it did. You don't work there anymore. Valuation. Emily, how well will Microsoft stock do over the next 5 years? How safe is it? Keeping in mind a 10 is a sure thing, a 1 is a lottery ticket.
Yeah, I give this a 5 to 10% performer and an 8 on safety. And that really puts it in the camp of probably a barely market beating investment. I think that's about right. And an 8 in terms of safety, obviously a very strong business as we discussed. But I think valuation is really Microsoft's biggest headwinds right now. I think we're probably looking at low teens, if not high single digit top line growth, in my opinion, over the course of the next 5 years. That's lower than what the market expects. But with trading at more than 30 times earnings, I mean, their bottom line can grow faster than their top, but I just think those headwinds are there. So I had to ding it a little bit on my return expectations.
Yeah, Emily, I think that's a great explanation of where they stand on valuation. I don't differ too much. I squeak into the 10 to 15% range. I know from some conversations we've had from some other analysts at The Fool, I'm probably in the minority camp who thinks that Microsoft actually can outperform on the earnings front. It's not going to be a lot, but I think they'll get a yield out of their AI investments in the coming years that will help them get to mid-teens growth with their earnings per share. That'll be enough to push them over to that maybe 10% to 15% range. So not a lot of difference here, although it may seem from those ranges. And I give them a 9 on the safety score, going back to what Emily was saying about their balance sheet, credit rating, et cetera.
It's so hard with the Magnificent Seven. They're just so big, but they just have kept defying the law of large numbers for so long. I remember wringing my hands with Apple at a $300 billion market cap, which seems ridiculous in hindsight. Like a 10x later or whatever. Let's go with Top It. Asit, is there a company in Microsoft space that you like better?
Well, this is just by a hair, but I sort of like Oracle a little better. Oracle does the same thing that Amazon Web Services, Microsoft Azure, and other hyperscalers do. It offers up infrastructure for companies that want to be in the cloud and to also have generative AI applications there. But that's really what it's focused on today. And it's taken its multi-decade history as a database specialist and just pervade that into something much stronger. It's a more focused business. It doesn't have all the other business segments to keep up with. Okay, except for this huge healthcare acquisition, Churner Healthcare that they made. Accepting that. So it's a more focused AI play, but a similar theme to these big hyperscalers.
Oh my gosh, Oracle is a wild choice. And I was going to make an argument for Adobe, which is maybe more reasonably valued if their AI ambitions play out. But after hearing that, I have to give Microsoft dues here and say, no, I like Microsoft the best, although maybe I need to look into Oracle a little bit.
Excellent. I know, Emily, you were saying that in Microsoft space could be anything. And yes, I would have probably accepted anything outside of maybe the restaurant space and been like, yeah, sure. It's a competitor. Thank you to both Emily and to Asit. They've given Microsoft a fantastic overall score of 8.4 out of 10, which is right around the 8.5 that Dan Kaplinger and Toby Bordelon gave it the first time we did Microsoft a few months back. Since it was above an 8 back then, I had to buy shares after that episode. Things have been going fine since. Nothing big to report one way or the other. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Amazon. Till then, Fool on.
Dutch Bros.
You're in your darkest hour. You're thinking of selling it. You're like,
Oh,
yeah, but
that's easy. I mean, just go to a Dutch Bros. The line's down the street. Dutch Bros, at least it sells a concept that is attractive across the nation. Now, the question is whether or not it's growing so quickly, it's cannibalizing its own store sales, that when demand inevitably falls from where it is now because the hype dies down, if they can keep up that store count or if they have to start closing stores.